Hello, this is Tulane University's Burkenroad Report video for Bristow Group Incorporated. My name is Ned Ryder, and the other members of our analyst team are Barrett Cooper, Dewey Kardakasari, Pallav Mishra, and Reed Pennebaker. Our agenda for the presentation is as follows. We will begin by discussing our valuation and the methods we use to achieve this valuation. Next, we will provide a company description, followed by Bristow Group's business and commercial strategy and capital allocation strategy. We will then discuss recent investments made by Bristow Group, and then we will talk about property, plant, and equipment and how it drives company revenues. This will be followed by our Ben Graham analysis, and then we will finish with a summary of what we have reported. As of November 16, 2012, our 12-month target price for Bristow Group is $54. We arrived at this price using two valuation methods, the price-to-book value method and the enterprise value-to-sales method. These two methods are useful valuation metrics for companies with significant investments in tangible assets and therefore are more reliable measures to value Bristow Group stock in comparison with conventional valuation methods such as discounted cash flow and price per earnings. Here are the prices calculated for each method. As you can see, the average for the two is $54. We project an 8.26% increase from the November 16, 2012 price of $49.88. Bristow Group is a global helicopter services company founded in 1955 and headquartered in Houston, Texas. Its operations include helicopter services to the offshore energy industry, search and rescue, emergency services, training, and technical support. It is one of two global helicopter service companies. The company employs approximately 3,400 employees and operates in 20 countries worldwide. The bulk of Bristow's business comes from Western Europe, Nigeria, and the United States. The company has a market capitalization of $1.85 billion. Its enterprise value is $2.45 billion. Bristow Group has net property, plant, and equipment valued at $1.684 billion, which translates to approximately 550 aircraft. The current helicopter services environment demands stringent safety and efficiency. Because of this, Bristow Group has implemented a program called the Bristow Client Promise, which focuses on enhancing company value to clients through initiatives of Target Zero Accidents, Target Zero Downtime, and Target Zero Complaints. This campaign provides clients with a measure of safety and reliability so that one can compare Bristow Group to competitors and know that clients are getting the performance that they are paying for. This unique differentiation allows Bristow Group to charge a premium on its services because its clients truly value the safety and efficiency that the initiative provides. Bristow Group's capital allocation strategy focuses on improved balance sheet management, increased shareholder returns, and highest return of Bristow value added. Throughout its corporate and business unit management, Bristow Group proactively manages its capital allocation strategy by concentrating on return on invested capital. Despite recent acquisitions, Bristow Group still maintains the highest return on investment capital amongst its peer group. Additionally, Bristow Group continues to manage its capital structure and liquidity position to facilitate its growth and rates of return while maintaining prudent balance sheet management. In September 2012, Bristow Group invested in Cougar Helicopters, the largest offshore energy and search and rescue helicopter service provider in Canada, for $250 million. In addition to providing 8 Sikorsky S-92 helicopters in Canadian passenger, search and rescue, and maintenance facilities, this investment represents an opportunity for Bristow Group to gain exposure in an attractive and growing Canadian exploration and production market. The company anticipates that the deal will be at least 7% accretive to annual earnings per share and cash flows. In May 2009, Bristow Group invested in Leader Aviation, the largest provider of helicopter and executive aviation services in Brazil, for $174 million. In addition to increasing Bristow Group's fleet by 46 helicopters and 29 charter aircraft, this investment represents an appealing entry point into a new market that is a critical part of Bristow Group's long-term growth strategy. The investment is expected to be accretive to Bristow Group's earnings, but the real value comes in terms of substantial potential growth. Bristow Group is a capital asset-intensive company. Its capital assets consist of helicopters, facilities, and equipment. Our research has shown that increases in property, plant, and equipment are highly correlated to increases in revenue. In fact, the regressions from our model indicate a 97.39% correlation between property, plant, and equipment and revenues. Further, for each $1 million increase in property, plant, and equipment, Bristow Group recognizes an approximate increase in revenues of $78,000. After examining Bristow Group using Ben Graham's criteria, we determined that Mr. Graham would find Bristow Group's stock an attractive candidate for his portfolio because of the company's healthy dividend payment, affordable current price, low risk of bankruptcy, high earnings potential, and high liquidity. Thus, Bristow Group currently passes 5 of the 8 hurdles. The company falls short of achieving a price-to-earnings ratio at half the stock's highest price-to-earnings ratio in the trailing 5 years, and earnings growth of 7% or higher over the trailing 5 years, and a stability in growth in earnings. In summary, we project a 12-month target price of $54 and a market rating of market perform. The company's business and commercial strategy focuses on increased safety and efficiency through the Bristow Client Promise Initiative, while the company's capital allocation strategy focuses on increased return on invested capital and an improved liquidity position. Investments in Cougar and Leader will drive growth and provide exposure in new exploration and production markets. These investments are expected to be accretive to Bristow Group's annual earnings per share and cash flows. Increases in property, plant, and equipment correlate to increases in revenue. And lastly, to Ben Graham, Bristow Group is an attractive stock to be added to his portfolio. We thank you today for your interest in our Bristow Group report.